Hi, everyone. I'm Sabine van der Linden. Today, I'm going to meet with Mark McLaughlin. Mark is an IBM executive. He's a global insurance director for IBM, but also IBM Industry Academy member. Today, we'll be talking about a number of topics. We'll cover who is Mark priorities for growth, a new concept called risk experience, and then we look at the future of insurance, whether it's about tech or it's about business models. So let's get started. Hi, everyone. Today, I have the great pleasure to be with Mark McLaughlin from IBM, executive, insurtech and insurance expert. And we are going to cover today, how can we leverage policyholders, users, customer experience to drive unique journeys. Welcome, Mark.
Thank you, Sabine. Glad to join you today. This will be fun.
So it should be a lot of fun and should be highly entertaining, I hope, and instructive too for our listeners. And I want to start our conversation with who you are. Who is Mark?
Well, from a professional standpoint, I lead a strategy for the insurance vertical for IBM, pull together our hardware, our software, our cloud, our services, and our business partners, many of whom are insurtechs, to solve insurance problems, right? We don't talk about MIPS or throughput or, training times. We talk about claims and underwriting and policy administration. So been doing that for a long time in a number of different contexts, working in the insurance industry for 20 plus years. Let's just leave it at that. And, some of the first systems that I programmed were back in the 90s doing AI for underwriting, got to automated underwriting of 95%. And they're still running today. So, that tells you something about the industry or something about my coding skills, probably more the former.
You remember you said you were doing AI for underwriting. And I remember, I work with IBM too. We used to do a lot of predictive analytics, right? Advanced analytics in the time and helping insurers with underwriting and claims to try to automate and actually do what we call at the time less best actions.
Mm-hmm. Exactly. I during the .com years, I ran a CRM consultancy and that idea of sort of what's the right next thing to do that will maximize my value to the customer and in turn the customer's value to me. That's a space that's been of interest to me for a long time. So I actually do a fair amount, not just in claims and underwriting, but out in the distribution and marketing spaces as well.
Mark, why IBM? So what brought you to this amazing giant?
IBM, I think, has a pedigree of innovation, that's been built over many years. IBM Research is one of the great research institutions in the world. Growing up in suburban New Jersey, I actually interned at Bell Labs back when that was a big innovation center around the world. I think they've turned it into some other company now, but that idea of taking innovation and deploying that in ways that are helpful to individuals, that are helpful to society, that are helpful to solving real problems around risk. That's an area that's very exciting to me. And, those are the types of solutions that I've worked on in my IBM career and in stops previously.
One of my most amazing memory is when I used to go to the IBM training in New York and New Jersey. And you have this amazing building over there, and you have all the scientists and the whole history of IBM. And I used to walk through, looking at the mementos around the campus. And I had those amazing memories to meet the scientists and the educators, right, in the building, and their passion for the technology and also for the education they gave us as employee at the time.
That technology investment, it pays off in odd ways sometimes, right? Research, sometimes takes on these things that are 5 and 10 years out, right? And quantum's a good example of that investment right now. But Watson at one time was, that same sort of, 10-year moonshot type investment. And, just being able to show clients, the set for the IBM Jeopardy appearance, with Watson was, it's a really exciting thing to do. And then coming back and saying, how does that apply to solving a risk problem for an end insured at an insurance company, right? That blending of sort of the blue sky research into practical is something that I find personally very interesting, and is something that IBM does pretty well.
So moving from the background, I would love for you to tell us, what are your most memorable events of the past 18 months?
Well, as with everybody, COVID right off the top of the bat, and just doing what I do. I have a worldwide remit, so I'm used to flying 300,000 miles a year, and that all came crashing to a halt for me, like it did for everybody else, around about February of 2020. It's been a long, strange trip these last 18 months, being at home. My wife has not changed the locks on the door yet. So, I haven't outworn my welcome here, but, quality, this weird mix of really great quality time with my family and my children, but also missing that face-to-face client interaction, that face-to-face, whiteboarding and solving business problems, and coming up with new ways to sort of get all that done has been a sort of a professional challenge. IBMers are used to working from home and working remotely. We've been that way for years, but watching our clients, who might not have always been quite so used to that, evolve their thinking and say, hey, it's okay to have a discussion online. It's okay to make a decision on an RFP. It's okay to research technology in these ways. Right, that's permanently changed business, and I think those effects are going to reverberate not just in the business side, but in with all the insurance customers that we serve as an industry. The other big event, aside from interminable Zoom calls, right, is coming back. I was just at ITC. I know, Sabine, given your location, that was a challenge for you.
I know, but, I could not go. So tell me, how was that?
It was a little easier, and that was my first trip, since COVID started for business, and see people again, reestablish and renew relationships and conversations with colleagues I've worked with in some cases for many years. Is really exciting. And yet those interactions all change too, right? Now it's okay to say, hey, you know what, calendars aren't aligning, let's connect up via Zoom or WebEx or whatever next week, right? There's new business models that have sort of emerged out of it. And that was just, wildly apparent, sitting at ITC and watching all the interactions.
So looking at this, how do you think what you've experienced just looking at ITC is impacting insurers' customer experience and how they deal with their own customers?
Well, I think when we first started going into COVID, we had a point of view, which, I worked with some of my industry academy colleagues to sort of formulate around COVID and insurance. And our thought was this: there are insurers that were already investing in digital and relationships. And there are other insurers that were trying to figure out how to deploy laptops to their staff and trying to solve remote networking and security problems, right? They were kind of caught on the basics, and, no fault of their own. This is a big change for everybody. But those digital firms had a lead, and COVID has helped them extend that lead. And further to that, I think that you can split the digital players into sort of two types, right? One is some insurers invested in digital, but basically, used it as an alternative way to get the existing processes done, to sell the existing products, to operate the existing claims and underwriting systems. But there's a subset of those digital insurers who use this time to reinvent, to rethink what insurance is, to get out of the paradigm of I'm going to prepare a actuarial based rated risk product with a fixed term and a fixed contract, and an illustration that's got to be sold by an agent to an end insured, and is very regimented and rigorous, right? there's a class of insurer that has gone beyond that and said, how can I rethink risk? How can I rethink the risk product? How can I rethink the risk experience? And those insurers, I think, are accelerating their lead, right? They're the ones who are going to be around 10 years from now when, some of the other insurers that didn't start rethinking the risk product and stuck with sort of the traditional products are going to find themselves in a very difficult spot because they're going to be commoditized. They're going to be aggregated. We've seen it in different markets around the world. That's only going to accelerate. Amazon's going to come after all of them. So, it's going to be, you need that differentiation to thrive. And if you don't have that differentiation, I would question your survival.
So knowing that, big tech, you mentioned Amazon is coming after, insurance, love to dive into your growth priorities and understand what you are looking at very closely right now to make choices around who you're working with and how you're growing your organization within IBM.
Okay. There's what insurers are doing to grow, and there's what we're doing to grow, right? We are all about hybrid cloud and AI, right? Arvind Krishna, our CEO, is really doubled down on that vision, saying that is going to be IBM's bread and butter. That is going to be our claim to fame. We're going to help enterprises solve that problem. What does that mean, right? Hybrid cloud is the idea that you are going to have a mix of sources for innovation, sources for your compute power, sources for your operations. You're not all going to get to one single cloud. You are not going to get to, a cell phone set of data centers. Everybody's well aware of that one, right? It's going to end up being a mix, because you're going to want innovation from some other cloud. You're going to want to integrate an application that runs in some other environment. You're going to want to pull data from an ecosystem partner that might be, an edge compute model where a lot of that data is living in a completely different system. And yet, as an insurance company, I'm handling a lot of sensitive personal information. I am handling high degree of trust and reliability that is expected of insurers. And we are a tightly regulated industry. And so insurers are going to have to figure out how to mix. I might have an environment or two of choice, but I'm probably going to have a mixed environment technically. How do I secure across that? How do I monitor across that? How do I connect quickly across all that? And how do I do that at speed? Because, I may cut a deal with a telematics partner today, or, a distribution arrangement with a retailer today. I might have 3 more retailers tomorrow, or the one I have might kick me to the curb and go find somebody else, and I'm going to have to go rethink my retail strategy, right? So I can't predict, hey, everybody's going to partner with X style of firm, or everybody's going to pull this set of data. What I can predict is that those things are going to change over time. As an insurance company, you need to be able to manage across that. And where IBM's plan is we are going to help companies manage that hybrid cloud complexity. We're going to help them deploy AI to simplify it and to automate it where it makes sense. And we're going to help use those tools to help the humans in the process, really add the value where the humans should be adding the value, right? Don't fill out change of address forms, right? Build relationships with end insurers, right? And help guide them to risk decisions that are still going to be complex in this world, maybe even more complex, right?
You are actually bringing quite a few items. So hybrid cloud, right? On-premise and off-premise. It means that businesses have flexibility, I guess, as to what they do. You also covered the fact that we have to understand risk. We need to be able to understand how we do privacy and security in both areas, leveraging new technology such as artificial intelligence. And you also talk about augmented individual. I think there is this new term around this human in the process thing, where you actually, need to mix artificial intelligence and people, which leads to, I think, some aspect of ethical AI. Can you actually go into a little bit deeper around those 3 points, hybrid, and what that means?
Absolutely. So let's think about it from what an insurer is trying to do, and you are, as an insurer, trying to engage with people on risk. You're having to do that digitally, which isn't just automating your old stuff or putting it on the web, right? It's now multiple channels, right? It's social media, it's text and voice interaction. It is face to face, a lot of video calls, right? There's a lot of different interaction models and a lot of different players that you can have those conversations with. And you as an insurer trying to figure out how to offer risk products and services in that environment, right? You're not going to monitor every one of those channels all the time, right? Your average millennial, if Facebook's old hat, email, what, it's for old people, right? If you're not out on Twitch and Twitter and you're running a Discord, debate, you're probably behind the times, right? So, my kids think if it's not on YouTube, it doesn't exist. So you have to figure out how to manage across all that as an insurance company. And you're going to pull in capabilities from, marketing providers and, data sources and different sources of content. And you're going to try and deploy all that, across those channels. You need systems that are flexible. You need systems that are secure. You need systems that are interoperable. You can't say, well, all my stuff's on cloud X and yet this partner is on cloud Y, and without being able to interconnect across that. Being able to combine all that together into what I think of as sort of a new risk experience is ultimately where the battleground is going to be, right? Don't just sell me a product, give me advice, right? Don't just give me advice that is tailored to what you know about me, right? If I am a 45-year-old, mom who's got, 3 kids in the back of a minivan, I react very differently than a 25-year-old sports car driver or a delivery truck driver, right? To advice, to product offers, to help offers for help and how to avoid risks and, driver coaching, all those things. So how do I, as an insurer, kind of combine all that into a coherent experience that is tailored, right? I think that's where the really exciting part is. And then when I need a human to talk me through something, right? Do you engage that human seamlessly? Does the human know all the stuff that's gone on before in the conversation? Right? Does the human make intelligent recommendations? Next best action, right? It's laying out. It's a much more holistic sort of model where we replicate sort of what goes on in an agent's head, but we do that in a variety of contexts. And by the way, we don't get rid of the agent when we do that. I'm not saying replace the agent. I'm saying the agent is your trusted advisor that is, covering the ground behind all this. And when you've got a real, complex problem, they're there to help you. And when you got something simple, you don't have to bug them, right? You can do it online. You can do it with AI. You can do it via call center. You can do it at 2 a.m, right? Those are sorts of models I think that'll come to the fore.
So you are introducing an interesting new term, risk experience. So you've given us already some example. Can you dive into your definition of what risk experience means?
Yeah, that's a good question. So, we are, and we're actually about to release a study on some of these concepts shortly here, right? But, that risk experience is all about how do you help the customer through a risk conversation, help them think about risk and help them take good actions that'll help them reduce their risk. And those actions might include buying a policy, and it might include some other things. It's got to be a much more holistic sort of thought, right? First off, you've got to show up at the point of risk, right? I'm not thinking about insurance when, my buddy, the insurance agent, buttonholes me, at the tennis club at lunch, right? I'm thinking about, auto insurance when I'm buying a car. I'm thinking about pet insurance when I go and get a pet. I'm thinking about education savings when I have a baby, right? So how do insurers have visibility into when those things happen and have a seat at the table when those things happen, right? That bespeaks the need for ecosystems and partnerships, right? Insurers don't always have that seat front and center, but they can partner with those who do. Once you're there at that point of risk, help me think about the risk in a way that is relevant to me, right? And help me think about how to reduce the risk, not what product you want to sell me, right? When I buy a car, right, I'm going to need some kind of insurance on that car. And if you appeal to me emotionally about, banging up your nice car, or educate me a little bit about, the depreciation as soon as it drives off the lot, right? Those are good conversations to have, but different people react to those conversations in different ways. And so, be at the point of risk, give advice and mitigation, not just sell a product, and then tailor it to the customer situation and what you know about the customer, because different customers react differently. That's a demographic thought. That's a psychographic thought. That's a risk situational thought. And then help me manage the risk, which might be, again, sell me a policy. It might be sell me some tools that will help me reduce my risk. It might be, sell me some services that'll help manage risk, right? If I'm buying a new car at my age, right, you can probably assume I might have a teenage driver in the house, right? Or at least you can check on that, right? As a father of a teen driver, right, I would love for my insurance company to help me manage that risk, right? Are there tools that'll help me keep an eye, on when my son is driving at night? Are there policy options that'll help me encourage driving during the day versus driving at midnight, right? There's a ton of things that can be done, and that can be done in combination with auto manufacturers. It can be done in combination with sensors in the car. It can be done in combination with sensors on the phone. So, there's a lot of kind of interesting options if insurers would think about it as, how do you help me reduce my risk, instead of just, how do I sell you a policy, right? Selling a policy should only be part of the conversation, not all of it.
Yeah, you're talking about outcome, benefit, results. So looking at the end goal, right? We all want to achieve, and then embedding the insurance engagement within that. I mean, you already mentioned how this can be done differently. Is there any additional technology, capability, additional context we need to consider when we start looking at risk experience as part of, you mentioned, an ecosystem of thing?
Yeah, well, and it starts with ecosystems, right? Are you able to deploy technology quickly to sort of build those connections as your marketers, as your product, definers, as your actuaries sort of mull over how to cover a risk, right? You may strike up different partnerships for any of a number of reasons, right? It might be distribution, right? It might be capturing additional information. It might be being able to learn more about the customer so I can offer relevant advice. It might be to help, speed up remediation of a claim, were there to be one, right? There's a lot of different partners that are adjacent to insurance, and we've talked about, OEM auto manufacturers and telematics device providers, but, you could talk about, the financial aggregators, the Betterments of the world, right? You could talk about, financial savings, options, and even the colleges themselves, right? There's a lot of different partnerships you can envision that could help inform a risk experience. Can you set those things up quickly? Can you do those at speed? Can you maintain security, and can you maintain, the uptime and failover and all the stuff that IT people worry about in terms of stability, right? Can you keep all those things operational? There's an architecture kind of behind that I think is important to sort of consider. If you are reliant on a single cloud, you are vulnerable. If you are reliant on a single core system, you are probably vulnerable, right? If you're reliant on a single CRM system, you may be vulnerable, right? You've got to figure out how to work across those systems to make sure that you offer a consistent experience and a tailored experience, and an experience that's close to the point of risk for the customer.
Mark, I remember reading probably 8 years ago a Gartner report saying, we will all be working out of probably minimum five cloud infrastructure, for our data, like, being on a Dropbox and a Box and a Microsoft cloud and Apple cloud. Absolutely. And, today probably we have more than five, isn't it? And so
our numbers last study I saw was 8 per insurer on average.
So as you said, you cannot rely on one, and then you have to manage the risk which lies around having so many technology endpoints to actually manage your customers.
Yeah. Well, and those technology endpoints, there's the behavior we're seeing, in a lot of the insurance marketplace today for IT services. I think a lot of folks don't necessarily quite appreciate the risk that they are undertaking. there's a tendency to say, oh, I'm running on Cloud X, and they say they've got this covered, right? But you read the actual terms, and they say, well, we provide you the tools for you to cover it. That's a different thing, right? And then you got the insurance CIO or CTO saying, well, I'm gonna go source this to a particular core insurance application provider. Oh, well, they've got an SLA, I'm covered, right? And no one's kind of working through the process and saying, are you really covered all the way across the board? Can you verify that your data is not running afoul of GDPR? Can you verify that your data is destroyed when you ask for it to be destroyed? Can you confirm that data is locally housed? If your regulator pulls the data, calls for a data pull, can you do that cleanly and quickly? All of those issues, right? We've got this sort of daisy chain of cloud, 8 different clouds, and a bunch of different core systems, and a lot of different insurtechs all kind of interacting together, and a CIO or CTO is kind of riding herd over all of it. But do you have controls that are actually covering all of those spots and verifying that they are all actually running the security protocols that you think they are, right? Can you verify that when one system goes down, that the other systems are managed appropriately? Those are the sorts of things where, having a good architecture kind of behind all this, and then the right security, the right controls, the right open systems, that help you manage across that. Those become more important as insurers go down this path, right? When you just had your own data center to worry about, you can kind of work it there. But in this new sort of multi-cloud, hybrid cloud world, managing across that complexity becomes pretty important, and thinking through it from an architecture standpoint, sounds really gorpy and boring to the business side. And yet that's the thing that's going to future-proof you as an insurance company. Because I got tons of insurers who come to me and say, Mark, I believe you in all the digital stuff. I'm trying to do risk experiences. I've drunk the Kool-Aid. I'm not thinking products anymore. I want to do all that. I got these partnerships in mind. Man, IT takes forever to do anything.
Yeah.
Right. Yeah. And if you explain to them what their security vulnerability was while IT was taking a lot of time, they'd be horrified. Right. So there's a partnership between the insured and the end customer on risk experience. There's also a partnership between the business and the IT side of the insurance organization. And as insurtechs, right, how do you connect into that? Now, the insurtechs are, internally, sort of trying to become post that, I think, right? They got to scale up fast enough and have real grown-up security when they do that, right? That's their journey, right? The end and the incumbent insurers, right, have got to figure out how to integrate all this together and to do so, in a way that's reasonable.
So you have mentioned so many things, but that takes me into, okay, so what does it mean from a future of insurance viewpoint, Mark? Is it about tech? Is it about business models? What do we do with all this stuff you've just mentioned to us? Business
models first, tech second. The tech has to power the business models, and the tech can enable some of those business models because I have access to IoT data and wearables data and new space monitoring of what's going on the ground, and financial payments flows from some of the fintech providers, right? There's a lot of data you can kind of pull into the mix. The future is really pulling those things together into sort of that coherent risk experience, and being able to do that at speed and being able to do that at scale. It's getting beyond, I am going to make my bread and butter. You look at the Geicos and the Progressives of the world, right? They are very quickly diversifying, their product offering, even if they have to get somebody else to underwrite some of it underneath, right? They don't care, right? They know they got to get bigger, right? USAA, it's kind of known this for a while, right? They offer, 10 plus product lines, and, they take it very seriously. If it's share a wallet is sort of what they think about, right? And that's not a profit statement. That's more we've failed in serving our customer if they're buying their stuff from somebody else. So we should work on that, right? So, but getting to that sort of holistic provider, I think that's where some of the bigger, incumbent insurers will go. And then you'll have this cloud of insurtechs, and embedded insurance in other industries that are providing you risk coverage, because they're closer to the point of risk. They can do that. you may end up as an end insured. You might get your rental car insurance just in time when, from somebody that's not the rental car company, because they're pricing it really high, right? But you may have an option for that. You may have an option for for some of your home coverage. You may have an option for liability coverage. There's going to be holes in all of that, and since you've got so many different providers providing all these little micro products, right? There's gaps and there's overlaps. Someone's got to backstop all that. Someone's got to say, okay, but I got you covered no matter what, right? You go do those things because that's at the point of risk, makes sense. But when those things break down, right, I'm here for you, right? And that's where I think the bigger insurers can really play well, right? I rented a car a couple of years ago in Europe, Italy, as it happens. I braved the Italian roads, and I got through unscathed mostly, except for when I parked my car in a valet garage and they dinged up the car. So I got back to the rental car place. I didn't even know until I got back, right? And I said, dinged up the car, had a long conversation in Italian. I'm trying to get to my flight. We eventually, and I thought I had 3 different sets of coverage, right? Because I had bought it with a credit card that supposedly offered coverage. I thought my home auto insurance policy, would in fact cover it. Turns out it does not. I had a 3rd set of coverage, I think, through some kind of travel insurance or something. Anyway, I wasn't covered, as it turned out. Well, I was, but technically the 2 insurers kind of pointed at the 3rd one and said it's them. And then they said, well, here's the Byzantine claim process that you're going to go through, with multiple phone calls in Italian to try and, resolve this claim. And I ended up just saying the heck with it and paying the claim, which I'm sure is exactly how the process was designed, right? So I thought I had coverage. I had multiple players involved. No one actually covered me. Solving that backstop problem is going to be a big battleground, I think, for insurance in the future, right? So the insurtechs and a lot of these smaller micro products, right? And we see them around the world, right? They've been offering one-day auto in Japan for 10 years, right? Those sorts of products have a role, but you still have a bigger set of risk kind of around all that someone's going to have to cover. And I think that's kind of the future, right? And that backstop risk, by the way, that's a lot harder risk for, an internet giant to come in and commoditize, right? I think of it a lot, it's a lot like the travel industry, right? When Expedia and Travelocity and those guys all came along, right? Travel agents, you used to call up your travel agent, book a flight, right? And they booked the flight and got a 12% commission, and, it was easier than, whatever you had to do with the airline. The web wasn't there. So, okay, everybody was kind of, fat, dumb, and happy, right? The travel industry got upended by all this, and 90% of those travel agents are gone, right? But the last 10% are providing that concierge level of service, right? And when I booked my honeymoon with my wife, darn well, I paid $450 to that travel agent to go make sure everything was spick and span, and it worked. It was great, right? They make a very, those top end agents make a good living. And I think that's where insurance may end up, right? A set of micro products, and then that kind of big holistic, risk experience style backstop coverage.
Do you think actually today the traditional insurer can serve a Gen Z or millennial, right? They are expecting push button coverage, real time, satisfaction first, and therefore looking for something which is much more serviceable. What's your view?
I think it is possible for insurers to do it, but they've got a ways to go. They don't move quite as quickly, and they don't always think about the problem quite the same way as an insurtech. So I had a conversation with a millennial. A colleague of mine's daughter had just taken a job at a large insurance broker, and I called her up, congratulated her, said, hey, if you need a hand, I know the industry pretty well. And we were talking about, and she moved to a new city, and and I said, well, okay, make sure you got your renter's insurance, right? And she goes, oh, I already got that covered. I did it all online. I said, oh, really? Do tell. I said, okay, Lemonade, right? And she goes, yeah, it's Lemonade. It was so easy. That was her comment, right? I think insurers have to make it easy for those entry level sorts of value propositions, right? And the big battle, between the insurtechs and the bigger insurers is, her financial needs are going to mature, right? She's going to, move from renting to buying a home. She's going to buy a car, right? She's going to get married, and maybe have kids, right? All those things, create a much more complex financial life. Is Lemonade going to scale up fast enough to cover all that, or is she going to move to another, to a bigger insurance company and sort of graduate, so to speak, or do they partner and figure out a transition plan, or does somebody buy somebody, right? And I'll leave out who might buy who. I'm a little leery of that last one, because I've seen, we've scoured, the annals of insurance trying to find instances where a big insurer bought an insurtech and actually got value out at the end of the day. And there's a lot of train wrecks, and not a lot of value being, created. It tends to be value dilutive. So I don't think acquisition is really the way to go. I think it's going to be more partnership. Because I think the insurtechs bring that slick interaction and, that understanding of millennials, in a way that's very quick, quickly developed, and the insurers can get there. It's going to take them some time, but the insurers have a ton of, a ton of risk expertise and a financial position and a regulatory relationship where they've got some things to bring to the table too. So it ends up being cooperative, I think.
Yeah. When you look at both worlds, so when I interact with insurers and insurtech, it's like, two overlapping circles where the insurer provides, distribution, infrastructure, knowledge, regulation. But then you have this Keo theory where you have to actually appreciate that insurtechs are working as, entrepreneurs, are bringing new ideas and, looking at disrupting business models. And you need to find a way to combine the two. And I'm not surprised that most of the acquisitions you've seen are not always very effective, because when you're actually trying to embed a new into an old environment and you apply the old metrics, often it just doesn't work.
Yeah, but Sabine, is that the young people and the old people, or is that the young tech and the old tech, or is it the young interaction model and the old interaction model, right?
It's all about, you're right. It's all about really understanding what can be mixed as part of the, new juice in some ways. And sometimes, the old and the milk will not mix because they have not been thought through correctly.
Yep. No, exactly. But I will tell you, we've done longitudinal studies over the years. We're one of the few entities doing, the multi-thousand and, many country, consumer studies in insurance. And one of the things we found that's pretty consistent is, that the end insurance customer at some point wants to talk to a human. When it gets more complicated, or when they're buying something new that they haven't bought before, right? When it's a $200 rental policy, sure, right? You start getting into $1 million life insurance policies, I think you start running into situations where they're going to want some of that human interaction. It's not all going to be digital. It's not all, done with a YouTube video, right? There's an interaction point there where I think the insurtechs and the incumbent insurers can help each other, right? I do think that there's great opportunity for, those sorts of constellations of value to emerge, because together they are going to be much better than they are separate.
Absolutely. Absolutely. Which takes me to, another question I have for you around technology and how technology plays in this conundrum. We often talk about data being the oil of everything today, the gold, the oil. We mentioned recently maybe renewable energy for our future. So how do we handle and harvest data when we actually look at how insurance companies deal with it today? A lot of historical data, but we need new data to make better decisions, risk experiences too.
Well, a couple of things, right? First off, the broader, a set of information you can assemble, the better. And insurers have a lot of incumbent data internally that they probably have a tough time harvesting, because it's all split out on those, 14 policy administration systems and 8 clouds. But there's data that they can get through the interactions that people have with, insurtechs. There is data that they can exchange with retailers, with auto manufacturers, with utility providers, right? With college advice and savings firms, right? 529 plans. There's all kinds of data there. If you can negotiate the right trade that makes sense for all the players, and make sense for the customer. One of the findings in our upcoming study, we asked a lot of end insured customers in various markets, like, are you willing to give up your data? And if so, what's it going to take? I've always thought this, but it's nice to have proof. If you offer someone reasonable risk coverage or reasonable risk advice, they understand that to give you good advice and to give you a good, risk experience and a risk product, that they're going to have to give you some information, and they're okay with that. They're absolutely fine with that. Hey, if you're going to help me manage my teen driver, sure, monitor my car. I don't care. Right? It sounds great. Right? Whereas if IBM called me up and said, we want to monitor your car, I would say, go away. Right. So I think there's opportunity there, but you've got to be able to form the business relationship first. Then you've got to be able to capture the data. And a lot of these things are edge compute problems, right? They're very large sets of data that are not in your data center and are going to be really expensive to move into your data center or into your cloud because it's on somebody else's cloud. So how do I run a satellite set of tools? How do I run some kind of information extraction, or AI paradigm over there so that I can get the insights back here in my neck of the woods, right? I've got to connect all that together. And then I've got to figure out how to make decisions that are tailored and insightful for the customer. And I've got to avoid bias, right? And that's an area I think is going to increasingly, get play. We've had some of our largest customers already ask us about this. The AI that is used to figure out what the insights might be, to figure out, that, hey, this particular product might make sense for you at this time, the next best action algorithms. If you're not really careful, you can end up introducing bias that's unintentional. Insurers, had enough problems in the past with redlining and with bias accusations, right? In today's environment, people are even more concerned about that because we've, in other realms seen, the obvious, negative effects of bias. I think that's going to be an area where, using the data correctly there's great reward. And I can make a great societal argument for why insurers should do it, but they have to do so responsibly. And, it's going to be a balance point there. My argument for doing it is, look, we've had multiple catastrophes around the world where the losses were 4 or 5 times the insured losses, right? That means our industry has failed in leveraging data to convince people that darn well need insurance and darn well need risk coverage and darn well need to, take actions to reduce their risk. We're not getting to them, and we got to get to them. And data is the way to do that. We just have to do it in a way that's responsibly and as a fair trade and fair value to the customer.
So we covered so many things, but I wondered, for the listener, the viewers, would you be able to give us some examples of a great, relationship maybe with, clients of yours who have done amazing things, or client of yours who have been doing amazing things with insurtechs? Are there examples we can actually leave behind to learn how to do it better?
One of the things that I think we've seen work pretty well is using AI to help sort of make transactions a little bit smoother and simpler for the end insured. We had a client in Japan who had a workforce that was very knowledgeable about their life insurance products and was very knowledgeable about how to help customers. But they were, as is happening in many mature markets, right? Both the customers and the employees were all getting older, and it happens to all of us eventually. And they were getting to the point where they were just losing so much expertise out the door to retirement that is becoming really difficult to service, a set of customers who, as they were getting older, right, needed more handholding, more patient interaction and discussion, more questions answered. And so we deployed AI as sort of a force multiplier, right? We said, all right, how do we use, Watson and the data that we've got about these customers and the data that we've got about the market, right? To not just to automate the process, because while that does add some value, right? A lot of these questions are pretty complicated. but you use it as a way to help coach the folks on the phone and sort of maximize their time on the phone. And we've done this, with a life insurer in Japan. We've done this with a credit insurer in the United States, right, where we've used AI to sort of optimize the transaction in terms of who's talking to who, right? When the customer calls, do I route them to the person best able to answer their question? Do I route them to the person who is best suited to talk to that style of customer, right? It's a grandmother calling, right? You think, geez, we should have the old person talk to that person. Actually, no. A lot of times it's have the young person talk to the old person. It ends up working out pretty well, right? The data kind of drives this stuff. If you use those coaching tools, if you use those matching tools, if you use AI to sort of make sure that the transaction is, informed well and is set up for success in the first place, right? A number of things happen, right? One is your call center can handle a lot more stuff, right? Two, your call center actually it shows reduced turnover because your customer care experience overall is better, and your CSRs don't get yelled at quite so much, and so they're happier. They're talking to people they like, right? There's a lot of knock-on effects where if you use AI to sort of make these transactions a little bit smoother, take the really simple ones and make them automated, right? We're at a point with our customer care. We can, the metric they use in a call center is containment, right? We can contain 80% of the calls, right? So 80% of them do get handled automatically because the AI is good enough to handle the change of address, or, hey, I want to, change my deductible from 500 to 1,000, right? Or I want to, I'm adding this piece of jewelry, right? I mean, these things are all manageable. And so you're concentrating human attention on the stuff that really matters. And then you're helping those humans with the tools to have a really great conversation. And that makes everybody happier and results in more efficiency and, a better risk experience.
That's wonderful. Mark, thank you so much for your time. What would be your last words of wisdom for our listeners?
Stay curious, stay, informed on things going on outside your industry and outside your line of business and outside your market. Listen to great podcasts like Sabine's, but, listen to them elsewhere, right? I read Adweek, right? I read a couple of different space publications, right? I used to work in defense. I read some of that, economics treatises. I stay broad, because to build a great risk experience, you have to have that broad experience to think about the problem in different ways. If you get hung up on, I've got to automate my existing insurance processing, it's going to get run over 5 years from now. Don't spend your time doing that, right? Figure out how to be a great risk partner. And to do that requires a very wide range of thought. And, I think if you do that, right, and then build architecture to match those set of possibilities, right? Don't architect for today, architect for the 5 different tomorrows you might create, right? You'll be successful, and you will fend off the internet competition. If you're in insurtech, you will have great interactions and opportunities to partner with others. If you're an insurer, you'll have, a way to incorporate the insurtechs, and if you can't beat them, join them. And, and if you're a regulator, you'll end up with access to all of this in a way that's relatively seamless and, hopefully free from bias. So, exciting options for everybody as long as we think broadly.
Thank you, Mark. So today we met with Mark McLaughlin, IBM Executive, Global Insurance Director, IBM Industry Academy member. Where can we find you, Mark?
You can find me on Twitter at McLemark, MCLMARK. You can find me on LinkedIn at the same address. And, we've got blogs that I do occasionally with some of my IBM colleagues, and a big study coming out in November. So if you're listening, keep an eye out for that.
Yes, and you will find Mark tweeting with me as well on Twitter, and also engaging on LinkedIn. So please.
I just got to try and keep up with you, Sabine. I got a ways to go in the volume department. We're getting there. So appreciate your helping out. So.
Thank you so much for this wonderful talk. Thank you, Mark.
Thanks so much.